All right, let's get right into it. For ages, people have argued about what really backs the US dollar. Is it just faith? Is it debt? Well, today we're diving into a pretty powerful idea, that the real power behind the dollar isn't tucked away in some vault. It's backed by military might. And believe it or not, a recent crisis just put this whole theory on full display.
But to really wrap our heads around this, we have to start with a more fundamental question, one that applies to everything from a construction site to global shipping lanes. What on earth happens when a risk gets so huge, so absolutely unpredictable, that the entire private insurance market just says, nope, we're out?
Well, in the construction world, they actually have a name for this. It's called an OCIP, or an owner-controlled insurance program. Think about it. If you're building a massive skyscraper, one little accident could bankrupt any one of your contractors and their insurance company. So the project owner, the big guy, steps in and says, look, don't worry about it. I'll provide the insurance for everybody on this job. They become the insurer because they're the only ones big enough to stomach that kind of risk. Now, remember that idea. Keep it in your back pocket.
Because what if I told you that the US government just issued the single largest OCIP in history, and it happened so fast that almost nobody recognized it for what it was? So here's the scene. A conflict in the Middle East flares up, and it effectively shuts down the Strait of Hormuz. And listen, this isn't just any old shipping lane. It's one of the most critical arteries for the entire global oil supply. All of a sudden, the very foundation of global commerce is at risk. And this is where that insurance problem we were just talking about comes roaring back, but this time on a global scale. This is the exact moment where the private market just taps out.
The sheer scale of the risk was just mind-boggling. You had 329 massive vessels stuck in the area with an estimated exposure of $352 billion. I mean, how do you even begin to write a policy for that? You can't. It's simply too big.
So what did the insurance giants do? Exactly what you think they'd do. Huge players like North Standard and the London P&I Club, they looked at the situation, saw a risk that was literally impossible to calculate, and they just pulled their coverage. Poof. Just like that, the insurance market for the Persian Gulf simply ceased to exist.
And who stepped into the void? You guessed it, just like the owner of that skyscraper project, the U.S. government stepped in. It used a pretty obscure agency that most people have never heard of, the Development Finance Corporation, to basically become the insurer of last resort. It put up a backstop for the entire shipping industry because it was the only player on Earth left with deep enough pockets to do it.
But here's the thing. This move might look like a one-time emergency fix, but it's not. It's actually just the latest chapter in a much, much bigger story. A story about how we went from backing our money with gold to backing it with guns.
You see, for a long time, the answer was easy. The dollar was backed by actual physical gold. But in 1971, President Nixon changed the game completely. He cut the cord between the dollar and gold. And out of that, a new, and you could argue much more powerful system was born, the petrodollar system.
And the difference is everything. The whole promise of the gold standard was redeemability. You could trade your paper for metal. But the promise of the new system, it was the security of global trade. The backing was no longer gold sitting in a vault. It was the U.S. military's power to keep the seas open and the oil flowing. And in return, the world's most vital commodity, oil, would be priced in U.S. dollars.
And this is the real light bulb moment. The petrodollar system itself was the original massive globe-spanning owner-controlled insurance program. The deal was simple. Oil producers price their stuff in dollars, and in exchange, the U.S. provides the security to guarantee that oil can get to market safely.
And here's the wildest part. None of this was a surprise, at least not to the financial markets. They've understood this implicit insurance policy for a very, very long time. I mean, think about it. While the news headlines are screaming about a new war in a critical part of the world, the S&P 500 just kept chugging along near its highs. That wasn't panic. That was the quiet confidence of a market that had already priced in the fact that the insurer of last resort would step up. And if you want to see where the smart money was really going, just look at this. U.S. aerospace and defense stocks, up 52% in a year and a staggering 168% over the last 3 years. The market wasn't surprised by military intervention. Heck, it had been betting on it for months.
So if you look at it this way, this recent intervention wasn't a new policy. It was just the latest premium payment on a global insurance policy that's been active for about 50 years now.
And we've all seen this playbook before, haven't we? Just think back to 2008. The entire private banking sector was on the verge of collapse, a true systemic risk.
And what happened? The U.S. government stepped in and bailed out every major bank. That event burned it into the memory of the markets. When the risk gets too big to fail, the government will be there to absorb it.
Which brings us all the way back to that big central question. After seeing all this play out, what really backs the US dollar today?
Well, the answer seems pretty clear, doesn't it? It's not some shiny metal locked in a vault. The real backing is the full might of the world's most powerful military and economic machine, and more importantly, its proven willingness to use that power to keep the global system stable.
So ultimately, the buck really does stop with the US government. The dollar holds its value because when everything else fails, when risk goes off the charts, there's one entity that has the sheer power to absorb that risk on a global scale. And that implicit guarantee, that is the real foundation of its value.
But of course, that leaves us with one final and pretty heavy question to chew on. How long can this go on? Is being the world's insurer of last resort a sustainable model forever? Or are those premium payments, both in dollars and in military commitments, starting to get a little too expensive to keep making? That's definitely something to think about.